Alright, good day. So this is Festus FX. So in this video, we're going to be talking about how to pick entries for swing trades on gold. Okay, so gold is a very volatile asset. Alright, it's one of the most traded assets in the forex space. Sorry. So the first thing you want to do to trade gold effectively in we're speaking specifically about swing trades. All right, we're not going to talk about day trades or scalp trades. All right, so swing trades. So to trade gold effectively, you need to do it from the higher time frame. The first time frame to pay attention to trade gold effectively is the weekly time frame. Okay, so this is currently the weekly time frame. Okay, so you could obviously see that the market has been in a what do I say? So the market has been on this. You see this old bullish move. This was the price trying to make a retracement on this sell. So the market sold from this highs to this low. So this is more like a retracement. Okay. So we expect price to keep dropping, but nevertheless, price is bullish. All right, price is bullish. But one thing you want to take note when you come to the higher time frames like this is to take note of where you see wicks. And when I mean wicks, you want to take note of candles that have wicks that are longer than the body. So this is an example. So you notice that this particular candle, you can see it has wicks that are longer than the body. This is another one. This particular one is another one. Okay, so you want to take note of candles, weekly candles that have long wicks. Their wicks are longer than their body. Okay, can be on at the top side or at the bottom. All right, and you want to mark out those levels. So what you do, you take your trend line, you just mark them out. So I'm going to mark this. So take note of those wicks. Areas have not been swept out. Okay, so you notice that this low has not been swept out as well. You can see that this wick is longer than the body of the candle. Okay, so let me quickly edit this so it looks like a perfect line. Alright, so you notice I've identified 3 areas already. Okay, pay good attention. Okay, let's do this again. Alright, so now that I have identified these areas that have not been mitigated, I already know because of the current price action. So from the current price action, I can obviously see from the chart that last week was bearish. Okay, now these whole candles that were bearish are obviously telling us that the market is currently bearish. So we're expecting price to sweep these lows. Hope you're paying attention. We're expecting price to sweep these lows and keep buying. Sweep these lows and what? Keep buying. So obviously we see some form of rejection here. So we want to see price sweep this low. It can happen this week. It can decide to happen next week or some. But overall, this is where we want to see price sweep before we see some more bullish action. So having understood this on the weekly time frame, next time frame is obviously the daily time frame. So on the daily time frame, you can see those areas I have marked out already. Now this is what we call a drawn liquidity. Alright, so this, you remember I've taught several times that every candle's high and low, it's an area of liquidity. Now this is important. Why? Because after this bearish candle closed, you notice the next candle was bullish. It did not take liquidity before buying. So this was intentionally left behind for price to magnet price back here. Alright, so price is going to definitely come back here to sweep these lows out because of this candle. Alright, I'm going to explain more in our other classes. Alright, so I have videos dedicated for this particular type of liquidity. Okay, so but for now we can already see that from the real time frame and the daily time frame, this is the area where price is targeting. Alright, now this week has already been swept out. Alright, so price is currently consolidating, as you can see here, and after consolidation, what do you expect? A breakout. So we're definitely going to see a breakout. Alright, now because this is the daily time frame, I want to take note of this. I want to take note of this area. So just like I explained on the bearish candle, you would also notice that we have alright, so let me say this again. You notice this is a bullish candle. When we see a bullish candle close like this, we expect price to keep buying and classic higher highs and higher lows. But you see, price did not sweep these highs out. I think it. So this is another area that was intentionally left behind. You can already see the difference between this and the difference between this. After this bullish candle, you see this bearish candle swept the previous day before closing bearish. But this candle, you see price closed bullish, price did not sweep this high, it just kept dumping. So after price sweep this area out, we definitely should see price come back here on the daily time frame. So now that you have a directional bias, you already know where price is going and what you expect the market to do. So now you need to look for specific areas to look for entries. Alright, so this is where your 4-hour time frame and your 1-hour time frame comes into play. Now it's important as a swing trader, you pay a lot of attention to the 4-hour time frame and 1-hour time frame. Best you pick your entries from those time frames. Alright, because gold is very volatile and you would need some space to breathe. When I mean space to breathe, you don't want to use a 10 pip stop loss or a 20 pip stop loss. Sometimes your stop loss will have to go to 100, sometimes 150, sometimes maybe 50 on the average. Okay, but you want to use this higher time frame so that you can have a bigger view. So on this particular time frame, this is a 4-hour time frame. I'm going to go to the 1-hour time frame and talk about that too. But you notice price has swept these lows out. As you can see here, price has swept it out already. So now the price has swept it out, price is currently consolidating, as you can see here. So what you want to do, you want to take note of the low and the high of this consolidation. So currently this is the low and the high of this consolidation. Alright, so we want to see a breakout. Now because we're expecting price to sell, we'll definitely see some sort of manipulation to the upside before sell. So when we say manipulation, price is going to sweep out all the stop losses above this area of liquidity before dumping. So we'll see some form of manipulation, just like we had here. Let me point it out. So you notice before the market took out this low, notice the market was approaching these lows. It didn't take it out. Instead, price went high to take out all the stop losses above these areas. So notice this was a classic manipulation before price eventually what dumped. Some persons may have spotted this early enough if you took note of this fair value gap. Okay, so you took note of this fair value gap. You notice that was the area price instantly reacted from and began to what? To sell. Alright, so what are the point of entries you're looking for? Obviously, you're going to be looking for basic order blocks, fair value gaps, or inducements. Okay, so basically I'm going to be looking for a specific entry pattern. So there are different entry models you can use to take your entries, but what you want to look for is, like I said, the market making manipulation to the upside. So now we already see this other block. We see this other block has already been mitigated. Now when people use other blocks, Some people use other blocks. Some persons use the entire candlestick, which is this. You can see if we use the entire candlestick, price has already mitigated the other block. If you use the entire candlestick, as you can see here, you can see price after this bearish engulfing pattern. You see price make retracement into the other block wick. Okay, but if you, some persons use the what's it called, the body, just the body. So you're using just the body, it means price has not yet mitigated it. So the question is, what is best to use? Should you use the body? Should you use the wicks? Should you use just the body, so you should use the entire wick? And so it really depends on you. All right. So, but overall, the bodies of the candles play more, gives more weight, because that is where the orders really are, the bodies. Okay. So, but for now, from this time frame, you can really see we really do not have any reason why price should get to the body of the candle. Really, there's no reason. There's no reasonable logic why price should buy all the way to this body. If price should buy all the way to this body, most likely we keep buying. So we have some fair value gap here. The price we want to mitigate. So we do not want to see it go to these levels. All right. So let's go down to the 1 hour time frame. This video is already becoming too long. All right. So on the 1 hour time frame, this is what I want you to take note of. Let me take this out so we could have a good, okay. So do we see this candle here? All right, there you go. So why am I paying attention? This is the 1 hour time frame. So that's a classic some persons call a doji star. Okay, so you can clearly see how price created this candlestick pattern. Okay, so after this bullish move, we see price reach high and close within this range. Let me identify it so you could see it very well. So this is the last candle's eye that was swept. Okay, so that was the last candle's eye that was swept. So clearly you can see how price swept that candle and closed below it. So overall, all the candles closed below that, right? And if you notice, that's just more like a 50% of this candle. Actually, now you can see today the market opened and mitigated that. So price touched the wick and instantly sold off. So if you had wanted to take a trade, this would have been your entry. This would have been your entry. I get it, because we had this little inducement here. All this wick you have here. So this was price sweeping out all this, mitigating this, and then selling off. So most likely we'll see price continue to sell. So most likely price has already done this manipulation. All right, price has already done its manipulation. But is it possible for price to still come back here? Yes, it's possible. So as long as price stays below this entire candle we just highlighted with this box, price is still very bearish. So if price comes back here, that is a good opportunity to sell again. So we obviously can keep selling from these areas till we get to our daily area of entry. So you want to sell from here, you want to keep your stop loss obviously above these areas. Now if you want to fine-tune it or get a better entry, that's why we'll go down to smaller time frames like 15 minutes time frame or the 5 minutes time frame, whichever suits you. Alright, but like I said, price has already mitigated it, so personally I'm not expecting price to get that high. So what I want to pay attention to is this draw on liquidity that we have here. This one. This is what I want to pay attention to. I want to pay attention to this order block. So this is the entire body of the last, let me zoom in so you could see it. I think you can see it. That's the entire body of that last bullish candle before the sell. Did you notice that price did not mitigate it? So that's a good area for what? For a sell. So price could rise tomorrow and get there for selling. Now some persons can use the body of the candle. So like I said, it really depends on you. And then this is a 15 minutes time frame. Obviously you have to take note of this area. So above here, this is where you want to keep your stop loss. Okay, let me quickly also take note of this. So this is the most immediate area of liquidity you may want to take your profit from. Okay, alright, so if price should approach this area, price may not get to the body. Like I said, price may just sweep this out and then begin to sell and get here. Are you following? So basically this is how to pick entries on gold. Alright, these are pick entries on gold. Now what you want to do is, when you're going to the lower time frame to pick an entry, notice we took note of, we already understood that price has already mitigated this entry. So there's no reason for price to go back here. Alright, so we went down to the 15 minutes time frame to look for entries from these areas. Are you following? Now it's very, very important. It's very, very important. Personally, I will use the body of the candle just around here, which is let's see. So if I want to take this trade, it's going to be at 50.37. I like to use round figures, so I just do 50.37.50, and then my stop loss may be just around here, 50.47.50. That's 100 pips. And then take profits 49.67.50. Alright, so that's a lot. I could try to hold it as a swing trader to this lows, which is around 42.50. Alright, so that's basically that. Alright, I don't want this video to be more than 20 minutes, so I hope you learned something. Just make sure you ask questions on the comment section if nothing is clear, or you understand how to frame a good setup. Alright, how to frame a good setup, you understand how to frame it from the higher time frame. Alright, so basically this is what we're going to be looking at for tomorrow. We may send a signal on this on the academy group, or we may not. But if you watch this video, then you already have an insight on what we're expecting the market to do tomorrow. Alright, don't forget to like, comment, and subscribe to the channel. I'm going to be posting a lot of educational stuff as time goes on, and you can obviously comment what you want us to talk about in our next video. Could be an analysis, could be about a concept, could even be about risk management, and then we'll try and drop a video about it and see how we can help the community. Peace out. Festus FX.